Right now, there is a booming market in car financing in the city of Chicago. It only stands to reason that in a city with close to 100 car dealerships and more than 1 million drivers, there would have to be a major industry for both car retailers and lenders specializing in auto loans. As of the last census, the mean annual income in the city is around $56,000, which means a largely middle-class buying population. In this consumer group, it's likely that most will have some problems with financing in the past and will be seeking bad credit auto loans in Chicago. Bad credit is something that dogs many consumers in the U.S., and many find themselves in the position of having to get auto loans with that bad credit. The consequences of doing this are higher interest rate payments and higher lending costs in order to cover the risk the lender is taking in providing the loan. To mitigate this, it's possible for the borrower to gain more confidence from a lender by doing a few simple things to let that lender know that he or she is serious about making good on an auto loan. While income is not directly tied to a person's credit rating, it is crucial in determining whether or not a borrower can pay off a loan. When a consumer applies for an auto loan, having proof of income is necessary to show the lender his or her ability to meet the obligations of that loan. This is usually in the form of tax statements and pay stubs to indicate that there is a stable supply of money coming into the borrower's household. Further, if the lender can see that the borrower is earning substantially more money than the amount of monthly debt he or she carries, the lender will be more accommodating when it comes to lending money. Stability is what the lenders are looking for when determining whether the risk is worth taking on a bad credit auto loan. Whatever the financial circumstances that lead people to struggle with bad credit, if they have not impacted them to the point where they can't afford to make a generous down payment, new car buyers in this situation should be ready to pay at least 20% of the total cost of the car up front. This includes not just the sticker price, but the loan costs, interest payments, taxes, license, and registration. This act allows lenders to see that the prospective borrowers are serious in making their car purchases and will be less likely to default on their auto loans. If borrowers have trade-ins that are holding on to some amount of their value, this can be applied to the down payment to offset some of that cost. There are many programs for bad credit auto loans in Chicago, which are directly marketed to consumers who can prove that they can meet a given lender's criteria for approval. With a steady income, the ability to make a down payment, and the willingness to pay the monthly bills, a bad credit borrower can defray some of the higher costs when he or she can show a lender that the deal might not be such a risky proposition. Federal Auto Loan. Good credit, bad credit, no credit, all good.